Okay, what is going on, guys? Welcome back to another video. In today's video, I'm going to show you guys how to scale down onto the lower time frames and optimize your entries to lower time frame institutional candlesticks. Why? What does this do for you? It helps you increase your risk to reward, and at the end of the day, more risk to reward, the higher percentage that your account is going to be growing at, more money in your pocket. Okay, so this is why a lot of smart money traders, a lot of traders in general, jump into the smart money world because they see these high risk to reward setups that everyone is catching. Now today I'm going to show you guys how to actually safely catch them, what confirmation that you need, and how to scale down from the higher time frame to the lower time frame and catch these setups that you all want to be able to catch. Okay, so let's get started. And boop. There we go. There we go. Okay, so let's get going. So in this example today that I'm going to show you, I am looking at gold on the 2 hour time frame, and I have established that I have broken structure right here. Okay, so what we can see right here is as price was slowing down right here from this bearish structure, price was slowing down and the range between each lower low was getting shorter. So what this was showing me is that eventually we're going to be slowing down, more lower lows are going to be created, more liquidity being smacked every single time we create a lower low. Eventually we failed to break a lower low. That's confirmation number one that we potentially could get a trend reversal to the upside. Confirmation number one has appeared. Confirmation number two is in the micro trend that we had right here, we got a break of structure. Okay, so that's confirmation number two. And then on the 2 hour time frame, lower high, this got broken. So for me right here, this level becomes our BOS, break of structure. This one right here. So once we got that break of structure, now what am I looking at? I'm simply just going to be looking at buys. Okay, I'm not looking for any sell setups at all. So what do we have right here? Price after broke this and it cleared the liquidity above here, price was just simply ranging. Okay, simply ranging. When price is ranging in a box like this, when you can draw box around price action, what you're looking for is a breakout to either side first, and you can assume that that is going to be the manipulation, because after that, that manipulation is going to what's going to proceed is the trend that comes after, which is exactly what we got. We had liquidity on the top, liquidity on the bottom, this double bottom right here. Okay, so price created this support, as you can see right here. Every time price was come to this level, it was reacting and then going up, reacting, going up. So at this level right here, we had liquidity. Okay, so what does price do? Price comes down as it's approaching, big candle, big bearish momentum candle down, clears liquidity, and then right after that we get big bullish momentum, large volume to the upside. This shows me right here that potentially some institutional sponsorship comes into the market. Okay, this is candle sponsored by institutions, meaning that this is our institutional candle. Now bear in mind, guys, I am trying to slow down I am trying to slow down my way of talking, because as you guys know, I'm Irish, so we talk extremely fast. So if I was talking to another Irish person, you guys wouldn't even understand what I'm saying. But bear in mind, I am trying to slow down the way I talk. So if I slip up here and there, remind me in the comments, but I'm doing my best, don't worry. Okay, so once we had this move right here, okay, overall, I know that I'm bullish. We broke structure to the downside. Okay, we broke structure to the downside. Now my next move right here is I am looking for price to break structure to the upside. So what I would need is a candle close above for this institutional candle to be invalid. Now there are certain exceptions that you don't need to break a structure, such as SC1 or a few other exceptions, but I delve deeper into this on the institutional candlestick lesson. But for this purpose, for a simple setup, what you're looking for is a candle close above the previous high right here. Okay, so we got that. My break of structure has been confirmed, and that's my BOS right here. Now we look for a retracement back down, and we want to base our trade off this institutional candle. Where does my entry go? Open, stop loss below the low, the close. Okay, we have an imbalance right here, so that's another confirmation right here for me that price come down lower. So it's another confirmation right here, the imbalance. Where do I place my take profit? Either above this high or above this high. Notice my risk to reward, that's a 3 to 1, meaning that for every loss I take, That's 1%. But if I win this trade, okay, I'm gaining 3%. Now, how can I make this setup turn into like at least like a 5 to 1, a 10 to 1, a 20 to 1? This is where you go down and form on your lower time frame, and you're looking for a confirmation entry on the lower time frame. Or you can simply just wait for a 2-hour institutional candlestick that's smaller, like this, for example. But sometimes you do run the risk of being hit like this, and then price reacting from the wick, which means because market is fractal, that's going to be a lower time frame institutional candlestick most of the time. So in this setup, I would avoid it because I'm aiming for the higher risk to reward setups. So what I would do is I would jump down to my lower time frames, and I would slowly start trying to potentially find my lower time frame ICs either here. Okay. Now, for me, what I would do is I would skip these lower time frame ICs if I don't have any imbalance. If price is efficient here, then I'm not looking for price to come down any lower. Price filled in my imbalance here on the higher time frame. So for me, yeah, I'm looking to enter from confirmation entry instead, somewhere from where price has reacted. So now what I'm doing is instead I'm letting price do its thing, let it touch and let it react. That's my number one thing that I'm looking for. I'm waiting for a reaction to occur first of all. Okay. So once that occurs, I'm jumping down to my lower time frame. And let's jump down to our 15-minute time frame. So my first confirmation was price came down, touched off the open of the 2-hour and pushed up. Now, the ideal scenario is that I would want to see price break up above this high right here for a break of structure for eventual more higher highs to be created. But because this range is so large, okay, very, very large, that it would kind of be unlikely that price would come all the way back down in most scenarios. I would just allow it. I would just make it as an exception right here. And all I would want is simply a break of structure on the lower time frame right here. So this high right here. So if I jump down to my 5-minute time frame instead, the fact that I broke up above this and I got a lower time frame break structure right here, this one right here, that is enough for me. So we broke it. We clearly had bullish momentum, passive buyers coming into the market from that level. That's one confirmation for me. As price retraces back down to this level, what am I looking at? I'm looking at my last down candle before the up move, which is my institutional candle right here. So now, as you can see, I can switch my buy to look at this open straight away. My institutional candle is much smaller. My risk to reward has jumped from a 3 to 1 to a 9 to 1 risk to reward right here. See the difference? So what I can do then is simply wait for price to come back down, and I can either go aggressive and just execute straight from the institutional candle without waiting for any confirmations here. Okay, because you don't know, sometimes price will just absolutely fly from the area that you marked out without actually like accumulating and then giving you confirmations and pushing up, or sometimes it will just accumulate like it has, give you confirmation and then move. So you don't know. So in this scenario right here, I would also mark up from low to high. I have my fib, and my fib lines up with the 71. Open lines up to 71. So this was a great area to enter. Now you could have had instead an entry from the 50% instead, okay, of the institutional candlestick, where it actually did even better, came down, reacted right off that. Watch how my what my risk to reward looks like then. Now you've jumped to 15 to 1. If we drop down to the lower time frame, in fact, what I'm gonna do, guys, is okay. So what I'm gonna do is use my replay tool, just so I don't have to keep scrolling back too much. Okay, so I jumped down to my 5-minute time frame. Check out my 1-minute time frame. My bad, I think I just confused myself there. Okay, yeah. This is what confused me right there. Okay, so this is my institutional candle. So this is the area where I would have triggered a buy right here. 50% or the open. Which one do I potentially want to take it from? Mostly the 50%, because that's going to give you the high risk to reward. But a lot of time it will touch the open and it will completely miss you. In that case, what I would do is simply form my trade put like 50% of my entry here, 50% of my entry there instead. So even if I get missed here, at least I will be entered. 50% of my position will still be entered here. But yeah, let's say you missed this one again. You missed this. You get that consolidation. As you can see, price hits these lows. Let's go to 5-minute time frame. Okay, price is dropping down slowly. As we are coming down, more lows are being purged. More lows are being purged, just like this. Okay, eventually this low is purged. What does price do? Price then breaks our structure, and bear in mind right here, this would be an even better confirmation. This third trade I'm going to show you is going to be the best one. Why? Because we had a confirmation that price failed to break this low right here, failed to make a lower low, and this was one confirmation on break of structure, second confirmation on break of structure. Okay, third confirmation would be this one up here. We only got two, but a lot of time when you're trading these lower time frames, the two confirmations itself of break of structure is enough. So we failed. We broke it right here on the 5-minute time frame, 15-minute, 30-minute. We broke it all. Okay, just like so. So my last setup that I would like to form, if I missed these two, draw 15-minute time frame. Okay, and let's say I missed this one, and then I have this next one. I form it from the open. Okay, I form it from the open or the 50%. That's another entry that I could have gotten in on right here. Okay, see the risk to reward. 50% of this. That's a 20. That's nearly 8 pip stop loss to nearly 200 pip take profit. What that would have given me was a 23-to-1 risk to reward right here. Okay, but notice that we're not just simply executing off any institutional candlestick that we see on the lower time frame. No, there has to be confirmations. For me to take these smaller time frame institutional candles, look where I'm at. Where is this? Where are all these levels sitting? Where are all these institutional candlesticks sitting? In my 2-hour zone, in my 2-hour higher time frame point of interest. So you need a higher time frame point of interest to actually drop down to these lower time frame setups and just start taking them. So what you could have done right here is stack your entries. Okay, execute, go, and then you could just go, like, once it makes this move up, I probably would have been break even, probably would hit me again. I would keep re-entering as long as I didn't get my low broken. Eventually, probably after being stopped out, break even multiple times. And remember, that's the thing with these higher time frame with these lower time frame setups, you're going to have a very low win rate. But what you're aiming for is that risk to reward. So you might lose like 10 trades in a row, but you need that 120-to-1, and that's going to give you 10%. Okay, if you're risking 1%. So that's another setup. Boom. Okay, beautiful trade. Let's say you missed this one. Now you could have gone in on a scenario number 1. This would be my last one right here. So scenario number 1 on a 15-minute time frame. A scenario number 1 on a 15-minute time frame would probably be a scenario number 2 on a 5-minute. Okay, even the 1-minute potentially. So your drop down. Okay, you drop down. Let me delete this because that's getting a bit confusing. So we're in the higher time frame point of interest. Now we are in the 15-minute time frame point of interest. Not only are we in the 2-hour point of interest here, we are now in the 15-minute point of interest, and now we can try and form a setup either off the 1-minute time frame or the 5-minute time frame. So what I would have looked for right here would be my last down candle before the up move. Okay, what would have been the ideal scenario was see all this liquidity, highs, lows, one more purge down, fill in the imbalance that we had right here. Okay, touch the institutional candle, and then push up. In this scenario, it completely missed us, but that's what's going to happen with a lot of these 1-minute setups. For me, I probably avoid these 1-minute setups. A lot of people do stick to them, but for me, I can still get really high risk rewards if I carefully pick my trades on like the 5-minute, 15-minute. So yeah, that would have been a beautiful trade that you could have capitalized on. And then eventually, boom, once you got into that trade, away it goes. Okay, once you had that confirmation though on the 1-minute time frame, let's say you missed this one, you get that break of structure on the 1-minute time frame. Okay, you go up to your 5-minute time frame, and now once again you're trying to scope for your 5-minute ICs. So you got that break right here. I would have preferred a candle, a body close, but the 1-minute broke above it. Okay, you can wait one more time, retracement back down, see the imbalance that we had right here. Could have had an imbalance entry instead. So just like so. Imbalance entry instead. Now it goes with the lower time frame type setups. There's multiple entries that you can get in. So if you miss a candlestick on the higher time frame, okay, most of the time you're still going to be able to get in on many different areas along the trend, as long as you're not too far up the leg, and you're fairly close to the accumulation from where price pushed away from. It's very good to try and get in on the lower time frames right at these levels. So like right here would be acceptable. Anything above the 50% of that trading range for me, okay, would be improbable. I would not like to get in from there at all, and my stop loss would just be potentially too big, and my risk reward would just not be it anymore. Okay, but the main idea behind this here is you're looking to take your smaller time frame setup within a bigger within a higher time frame institutional candle, within a higher time frame point of interest right here. It would not make sense for you to just drop down to lower time frame and start trying to snipe all these ICs, because you're going to get really frustrated, and you're going to start getting really emotional. Revenge trading will come into it and all of that. Okay, so that is pretty much it for this lesson, guys. Hopefully you guys understand now a bit more on how you can structure these lower time frame setups by dropping down to the lower time frame and trying to add to your position. Okay, as you can see from this example, boom, one setup 24. This was like 8 to 1 risk to reward. This one right here, 24 to 1 risk to reward. Last one that you could have gone in, scenario number 1. Okay, that would have been the same exact one, like a 23, 24 to 1 risk to reward right there. All within the 2-hour setup right here, 2-hour institutional candlestick, 2-hour point of interest. That would have given you a 3 to 1 if you took a straight aggressive entry. So the confirmation entry right here would have been your best bet. Okay, now that is pretty much it for this lesson, guys. Hopefully you guys gained some value. If you haven't already, make sure to head down to the description below. Sign up to, not sign up. Go down and click on the Discord link. Sign up to our free course. Sign up to the free app and join our free server. With that being said though, guys, thank you so much for watching, and I'll catch you guys on the next video. Have a good day.